We've actually been, as Carl mentioned, in a form of a bull market for some time.
Gold has been the best form of money for thousands of years, but I think today Bitcoin is the best form of money in the world.
To put it simple, I would say that Bitcoin tends to do well in fear.
What's up, everyone? My name is Jackson, and I'm excited to welcome to this week's market discussion, The Moon and DataDash. How are you guys doing today?
Well, I'm doing good. Thank you guys for both having me here. And Carl, it's a pleasure to meet you as well. This is kind of our first time getting to chat, so I'm excited to hear your kind of point of view. I've seen your channel a lot on YouTube, so I think after the YouTube censorship craze that went on just back a few weeks ago and stuff, there's a lot of interesting discussions to talk about for crypto markets, and glad we could be here together.
Yeah, same here. I'm doing very well, and very nice to meet you. Yeah, I've also been following your channel. I mean, you were the biggest, and you're still the biggest in terms of subscribers. And during the whole bull cycle, I remember your channel really taking off, and yeah, it was fun watching your videos.
So on Tuesday of this week, Tony Vase said that he wants to see Bitcoin hold 9K for 2 to 3 days before he calls it a bull market. And now it has been about a couple of days since he made that comment. Do you guys agree with this sentiment? Do you think that we are now in a bull market?
Personally, I believe that I would like to see Bitcoin go above $9,500 because when we look at the previous support and resistance, there was a huge amount of support coming in from that level before Bitcoin broke below that level. And then we even retested that as resistance. And yeah, this 9.5K level seems to be the most significant horizontal resistance. So in my opinion, that would be the level to watch. But it also depends on what time frame we're talking about, because I think that on the monthly time frame, we've been in a bull market ever since Bitcoin broke back above $6,000. So I think that I think that we have entered into the big bull cycle that everyone is talking about, this 4-year bull cycle or the big bull run. I think that already started, and then we got a little bit too excited. Bitcoin shot up to 14,000, and everything that goes up a little bit too quickly has to also correct, and that's what we're seeing now. So we did have a small little short-term bear market, and even in the short term, I think that we have started entering into a short-term bull market after we broke out of that descending channel that everyone knows about. So I think that the question is yes, but I also, in the very, very short term, I do want to see Bitcoin go above 9.5K and hold above that level. So to me, 9,000 doesn't really hold that much significance.
Yeah, to build on your point, I think Carl's second point about timeframes is very important. I usually, the same way I think as Carl does, basically like to focus on more long-term visions in regards to cryptocurrency markets, and it has a lot to do with terminology. So for 9,500, I think this is a similar level I've been looking at. 9,500 and 10,500 or excuse me, actually 11,000 is the other level we just talked about today on the channel. Those are some key levels of resistance for Bitcoin. I think to define Bitcoin as a bull, being in a bull market, just simply being at a certain price range is a bit nitpicky, I think, in the views of Tone. But what I would say is this: is that we've actually been, as Carl mentioned, in a form of a bull market for some time. We basically have gone through what I call the kind of the early stage of rally, or the accumulation phase, which is where we've gone from the final bottom in the market, which was around 3,100, and up to the level of $20,000, which was the previous high in Bitcoin. So the equivalent of this for the last cycle would be going down to the lows around 200, up towards 1,100, which was the peak back in the previous cycle. This is still what I would still define as the early stage bull run. Until we get towards 20,000, we're not going to see the kind of parabolic run up that we've seen in previous cycles. From, for example, when we went from 1,100 up to 20,000 back in December of 2017. That's really what I define as a key bull market for cryptocurrencies. But we're trending higher. As Carl mentioned, we're going for higher highs and higher lows. Those are all positive signs. And the crazy thing is, you don't need to use a lot of indicators. You don't need to use a lot of analysis. It's just simple macro market analysis where you're looking for those higher lows and higher highs. And that's what checks off the boxes for me. And I think we're very much on our way to the next cycle with a target range around like 80 to 100,000.
Carl, do you have any clear criteria that you generally use for trying to label a market as a bull market?
Well, I guess this depends both on the asset and the time frame again. When it comes to Bitcoin, I think that especially when we look at the bigger time frame and these 4-year cycles, and there are even arguments you can make that it's not even 4-year cycles, but there are cycles that are getting longer and longer. But basically, these hype cycles, I think that you could actually make so many different arguments and have different perspectives on exactly when the bull market started and when previous bull markets and bear markets ended. But personally, I think that the 20-month EMA has historically been very significant, and the 20-month MA. If you look at that level, especially for the last hype cycle, we can see that it seems like it's tried to provide support in the bear market, but Bitcoin broke below it and we broke down to 3K. And then when we broke above it, we've seen Bitcoin go bullish, and we've actually seen Bitcoin hold support above that level. I would probably say that as long as we're above that level, I think we are in this big monthly bull market. But I think I could take different perspectives on this, but that would be one of the things that I'm looking at in Bitcoin at least.
Do you agree with that approach, Nick?
Yeah, so I'll be honest on the specific indicators that you referenced to, Carl. I don't have 100% knowledge on how that would look on a chart, but I can say this: like generally speaking, if we're all working under the thesis that Bitcoin is going to go to some kind of large target range, like 80, 100,000, some people believe 200,000. I think, Carl, you've mentioned one day it could reach 1 million. Those kind of exponential figures, and it's actually it's not out of the window if you consider things like hyperinflation, and this is the fact that this is an emerging asset class. I think it's just over a longer time period. But the thing is, keeping in mind, if we do have that kind of target range, this kind of early stage of the bull market, again, we could throw different labels at it, but this range before we get to 20,000 is where you'll get the vast majority of returns. So if you do a very simple kind of set of mind math in this case, going from 20,000 to 100,000 is a 5x, right? And that's a great return. But this whole period from where Carl was mentioning, where we had the bottom at 3,000, anywhere below 20,000, you're going to start to get much higher levels of multiples if you build a position now. Again, not recommending anyone do that. I'm just saying this is why I'm positioned in crypto right now. It's not an exciting period, as you referenced to. There's no hype right now, but this is the general range we want to look at. And I again, as I mentioned about Tone, I know Tone and stuff, and I appreciate his thesis on TA, but for me, I don't care about day-to-day timeframes. I've loved the rally we've seen over the last few days, but it's a blip in the sense of my longer-term target over the next 2 to 3 years.
I would say that I absolutely agree to that. This is definitely a long-term play, and of course it's fun to watch the day-to-day action, but for sure this is a long-term play. And like you mentioned, yeah, I do throw out some crazy targets sometimes. I talk about $1 million, sometimes $5 million. I do have a few arguments for that, but I mean, I think we're all very bullish on Bitcoin, and whether it be 100,000 or 500,000, I think most of us have these quote-unquote crazy targets, because the mainstream people, they would clearly call us crazy. But what I usually tell them is that someone who back in just a few years ago said that Bitcoin could go to $1,000 when Bitcoin was just $10, that would have been even crazier, because back then there was no infrastructure and there was no knowledge about Bitcoin. There was so many uncertainties, and at that point it was actually quite unclear if it was going to work or not. But at this point, I mean, Bitcoin has everything going for it, and the hash rate is just creating new all-time highs all the time, going almost parabolic. And yeah, I mean, the fundamentals, they are off the charts, and I think that today, to expect Bitcoin to go to 100,000 or 200,000 or 300,000 is simply just looking at the current momentum and expecting the momentum to continue. And remember that the trend is your friend, right? And the trend has clearly been to the upside, and I think it's reasonable to expect Bitcoin to, at least for a few years, continue this huge bull trend.
Yeah, just to make one quick remark on what you're saying there, Carl, I agree in the sense of the momentum. One thing that I've kind of stressed before on the channel is this concept of inflows and outflows in markets. So again, with all markets, it's usually a principle of, are there more buyers than sellers? Like, where's the pressure coming from? And with the halving event, what's really cool about it is that we've seen both of the past 2 times when there's been a severe halving event where Bitcoin's actually had a liquid market. We tend to see that Bitcoin has these parabolic run-ups, and it kind of plays into that hype cycle you mentioned. The reason that is because on a day-to-day basis, in order for Bitcoin to maintain its price, there needs to be a matching amount of buyers and sellers. So you basically always have guaranteed sellers, which are miners, and then on the buy side, you have people who are either buying in for the long term or speculating on a day-to-day time frame. What happens is when you have that dollar amount of new issued Bitcoin drop in half, just like that, you now have an outweigh of buyers or inflows. So that basically starts to ramp up the initial price, and then you get additional buyers through the speculation, as you had mentioned. As the price starts going up, people never want to buy it when it's boring. So I think it's an interesting concept in that case, and that's where you can get to some of those crazy figures that again people will think are laughable or crazy, just like they did at 1,000. But it's because most people aren't looking at the data science models. They don't understand what Bitcoin is or what the halving is. We are in a small echelon of I think people who really kind of understand that as a community in the crypto space. So. We're all of us in the crypto space are definitely in our bubble compared to the world. So I think that people eventually will wake up to it.
Yeah, and for those of you who don't know, the halvening is when the mining reward is halved. So it's supposed to decrease the supply in the market and therefore push the price up. That's the general idea behind it. And there's a lot of anticipation for this event in 2020. And a lot of people have been talking about whether or not this event has already been priced in. How do you guys feel about this? Do you think that the halvening event has been priced into Bitcoin yet? Let's start with you, Carl.
So first of all, I think it's a little bit funny. Everyone uses the different word. Someone says halving, some people say the halvening. I'm not sure what's the correct term, but I'm gonna say the halving. And I think that the halving was priced in. I think this big run up from 3K up to 14,000, roughly these numbers, that was a premature breakout, and it was like people got too excited. I think that was a premature halving pricing for a lack of a better word, and I think that people got too excited, and that's why Bitcoin had to correct. And so if you ask me back at 14,000, then I think it would make more sense to say, yes, the halving is priced in at this point and we need to maybe correct or go sideways. But now I feel like we've had a huge correction, actually a bigger correction than I think we've ever seen in a Bitcoin bull market previously in terms of percentage gains, or at least it's one of the biggest ones. So I think that we've shaken out a lot of that bullishness that came in a little bit too early. So at this point, I don't think it's priced in the sense that I think that it's very likely that we are going to start going up now from these levels into the halving, or at the very least after the halving. I think that Bitcoin is ready to start taking off as a consequence of all of the attention about the inflation rate getting cut in half. And so yeah, I'm actually bullish for the halving. Maybe not necessarily in the immediate months now, but I do believe that the halving will make Bitcoin go up in value quite quickly.
So just to be clear, you don't think that it's been priced in yet?
I think that it was, like I said, it was a premature breakout, and that was the market kind of trying to price it in. But now I think that we've seen the correction that was healthy and needed, and at this point, no, I don't think it's priced in.
Great.
Yeah. To build on Carl's point stuff, for the previous cycle we saw, or some people call it its own bull market in this case, but basically when it went from $3,000 to around $14,000 back in the first half of 2019, I think that was mainly a mixture of, yes, some anticipation possibly for buying off of the 80% correction, which is where Bitcoin historically finds a bottom. A lot of the macro factors, what was going on in Hong Kong and Brexit and the United States and China trade war, there's a lot of geopolitical tension, and then also maybe some anticipation for the halving event. The thing is, the reason I always tell people, simply put, why the halving event can't be priced in yet in the grand scheme of things is because of that daily inflows and outflows. We may sit here and understand as Bitcoin holders who aren't really trading that Bitcoin is going to have a halving event quite soon. But again, we have to understand how small of a group we are. And the fact is that daily inflows and outflows will not change until that halving event happens, meaning that until we finally reach that mark where on a daily basis miners are instead getting 900 Bitcoin instead of 1800 Bitcoin that they will automatically likely sell on the market, that change in inflows and outflows will not be reflected. I did a video on this a while ago just kind of stressing this point. It's very basic math and stuff, but it's just understanding on a daily basis. If you went to the market, for example, and for example, a general everyday product like an apple, for example, like the fruit, you would basically have a daily issuance of 1,800 apples every day. And then even though we may know until we finally reach that point where there's 900 apples in the market and there's a demand for 1,800 apples, then the price starts going up, right? It only can happen at the moment when there's the supply shock. As much as we can price it in, and maybe some people are buying ahead of time, the vast majority of the world doesn't know about the halving, and the vast majority of the world doesn't know about Bitcoin. So that's where, as Carl referenced to earlier on in the video, that's where you get those hype cycles. People buy into it later, and that's what leads to the parabolic run up after the halving. So it sets that supply shock that initiates the hype cycle.
Mm-hmm. So you're also of the position that this event hasn't been priced in yet.
Absolutely, yeah. In the last cycle, for example, it took a period of around 2 to 3 months to really start hitting a curvature after the halving. So as Carl mentioned, like right when it happens, it's not going to instantly change prices, but it's something over a multi-month basis when there's months of buyers and sellers, and you start to see that divergence clearly showing through spot markets such as Coinbase and Bitstamp and Binance, and then also OTC desks that are filling large orders when there's an outweigh of more buyers than sellers.
So let's switch gears a little bit. In a January 20th thread, DataDash, you suggested how the Fed is supplementing excessive risk-taking through the repo market. And you suggested that this may be a reason why hedging assets like gold, silver, or Bitcoin are all starting to gain momentum in 2020. Could you further explain this relationship between the Fed's actions in the repo market and hedging assets like Bitcoin?
Absolutely, yeah. So to just try to provide a very quick summary on something that probably would take me a little more time to talk about, the repo market is a market that basically where banks are lending money overnight to one another. It's really one of the key parts of the plumbing of the financial system that keeps it going every single day. It actually had a freeze back in 2008 that really led to a lot of what we saw. So the repo market basically is an exchange of cash for usually high-tier securities such as treasuries. This is basically a U.S. government bond. And basically, this is a way that they can get cash to manage reserves. Okay. So normally, this market is operating fine where banks are lending to one another. The issue was back in September, there was an issue where the repo market had a shock where the rate shot up around, I think it was around to 8 to 10%, which is not normal by any means. And it made people concerned that there was insolvency in the banking sector. So what had happened was JP Morgan had withdrawn, as one of the largest banks in the United States, withdrew billions of dollars from the repo market, creating a supply shock to cash. And they've been using this for excessive stock buybacks. They've remanaged it into certain other investments. And because of this, the Fed had to step in. They had to step in and inject new cash in exchange for treasuries. So they, like a commercial bank, stepped in and provided, as a lender in this case, of cash for the short term. So the Fed generated cash overnight. At the New York, I think it was at the New York Fed basically, and they just printed billions of dollars in excess of around $200 to $300 billion. And this basically is new money that has been injected into capital markets out there. It's been basically lent out mainly to hedge funds who have been playing on the demand side for the repo market. So these hedge funds are coming in at the later stage of the cycle. They're getting overtly exposed to high margin positions at the peak of an equity cycle. And the point I want to drive here is that because of this, because we know that this money is going again to rampant speculation on equities, I think equity markets have gotten way overextended. There's not much room to grow. And now it's a point of trying to find where you can put your capital to serve as a hedge against that inflation of the base currency, the US dollar, right? We just had $200 to $300 billion of new issued cash. And that can, again, still continue to grow through the credit system. So in this case, the best way to hedge against that is an asset that is in nature going to hedge against inflation, which are things like gold and silver to some degree. Gold has a limited supply as well as silver. And in the case of something like, for example, Bitcoin, we have a finite supply. So I think Bitcoin not only gets its perks from being a speculatory new asset class, but along with that as well, for people who understand it, for money managers, I think it's going to speak even more time tested to that message of how Bitcoin can serve as a hedge for wealth. But again, it's going to take time to really evolve as a store of value.
Do you have anything to add, Carl? Because I saw on your that you made a Twitter post on January 28th where you said that without bank loans, there would be no currency circulation and that we are now dependent on commercial banks lending out currency, which is kind of falls into this whole repo mart transaction that Nicholas was just talking about, where banks can be loaning money to each other to keep the cash flow going. And you said that the future is Bitcoin. Do you see Bitcoin as providing a solution to this problem that Nicholas was just talking about?
Yeah, for sure. So the problem with the current monetary system is that the money that we use today is so-called easy money. And easy money is money that is easy to print or easy to inflate. And hard money, on the other hand, is something that is hard to print or hard to inflate, like gold or silver, for example. They are hard to inflate because it costs so much money and effort to mine gold and silver. So to expand the supply of gold, you have to really put in the work. But to expand the supply of dollars, it's just a press of a button and you can print trillions of dollars if you want to. So it's extremely easy to print fiat money, so it's easy money. So if the problem with the current monetary system is easy money, then of course we need to look for hard money as the solution. And if you look at Bitcoin, just like Nicholas mentioned, it has a finite supply. So not only is it somehow limited, but it's an absolute scarce asset where, gold is hard money because it's hard to inflate. But Bitcoin happens actually to be the hardest money on the planet because it's impossible to inflate above the 21 million. However, looking at today's, in the world today, we have the digital infrastructure, the internet, and the digital payments. So the whole infrastructure today needs something digital as money, and Bitcoin is just the obvious solution to all of the problems because not only is it the hardest money in the world, but it's also digital. So it's a perfect alternative to not only fiat but also to gold. So it's almost like you can take the best of both worlds here. It's limited in the supply, like gold, and it's digital and easy to send, just like fiat is today. So combining the best of both worlds, in my opinion, you get the best form of money that is available to us right now, and that is Bitcoin. So, gold has been the best form of money for thousands of years, but I think today Bitcoin is the best form of money in the world.
Nicholas, do you also see Bitcoin as the solution to the inflationary problems that are happening in the traditional financial market?
Yeah, when it comes to cryptocurrencies in the sense of monetary policies, I think that Bitcoin has one of the best it's not to mention the fact that it's a front runner advantage out of most cryptocurrencies, but along with that as well, having its fixed monetary supply at 21 million coins, I think is probably one of the best systems you can have. I'm a big fan of other blockchains like Ethereum, a lot of ones that are doing really exciting things, but quite frankly, Bitcoin's monetary policy having a fixed supply is so important. As Carl was kind of building on, gold is great because it does have a predictable rate of inflation around 1% to 2% every year. And that's really not that bad for a lot of people who deal with hyperinflationary currencies. 1% to 2% sounds like a godsend in this case. And that's in dollar terms in this case, right? You're measuring it inflating about 1% to 2% and still maintaining its USD value quite well. But another thing as well that's important to kind of talk about here when we're talking about Bitcoin is that comparing Bitcoin to gold on a kind of subjective level and being really critical about the pros and cons of each different asset, the only benefit gold has is the time-tested nature. As Carl referred to, like gold has been around for a very long period of time. Bitcoin is a new emerging asset that's been around for a little more than 10 years now, right? It hasn't been trading on markets for no more than about 8 years. So we need to really think about it for a second. We're talking about a new asset that offers a lot of benefits. It's got a lot of growth potential. As an asset, it's easier to spend. You can send it globally. You can't do that with gold. It has a fixed monetary supply. So as he referred to it, it's the hardest money. And in this case as well, you've got, again, that growth potential, I think, that's going to give it a lot of room to possibly grow as a new emerging asset. So you're talking about a $7 to $8 trillion asset class, which is gold, right? Or you're talking about, $150 to $200 billion asset, such as Bitcoin. What bet would you want to put your cards on over the next 10 years? As Carl referred to as we're in the digital age, everyone is digitizing everything that they like. So again, we have to ask ourselves whether or not we would rather see people storing their wealth in Bitcoin or gold over the next few years. And quite frankly, as much as I love gold, I think that Bitcoin is going to be where the exorbitant amount of gains are over the next few years.
So we've been talking about Bitcoin as a hedging asset, and there's also this narrative that has emerged about Bitcoin being a safe haven asset that was shown through the events of the conflict between Iran and the US, and most recently with the coronavirus outbreak. I saw on your Twitter, Carl, that you made a post talking about the correlation between gold, crude oil, silver, and Bitcoin, and using the coronavirus outbreak and these correlations as proof that Bitcoin is a safe haven asset. Could you just expand upon that theory a little bit more?
So, first of all, if you own Bitcoin, at least you can trust that the supply will always be the same. It will never be about 21 million. That can never change. But not only that, but also if you want to go away from default risk and third party risk, then yet again, Bitcoin is the perfect solution because there is no third party and there is no one that has some kind of liability. No one can be defaulted, and you have no risk exposure to third parties in the same way that you have in other assets. So it's exactly like gold in that sense, as long as you hold it yourself and not again, if you don't hold it in a third party somewhere. So I think that Bitcoin has all the properties necessary to be used as a safe haven, and I do believe that people will increasingly realize the potential of Bitcoin as a safe haven. And I mean, Bitcoin has only really been around in times of economic expansion, because the first few years when Bitcoin was around, no one really knew about it, but still Bitcoin had a fantastic explosion in growth. But I believe that now that people know about Bitcoin, it's going to be very interesting to see what happens in a potential financial crisis, for example, in deep uncertainty. I do believe that Bitcoin definitely is going to get attention and more liquidity, more people pouring in their money in Bitcoin, because they want to hide their wealth. And whether it be from inflation or from third-party risk and default risk, doesn't matter. All of these properties are there for Bitcoin.
How do you see the Bitcoin as a safe haven narrative, Nicholas? And how do you see the coronavirus outbreak playing into or not playing into this narrative?
Yeah, the broader message I would say is that it's step by step, slowly but surely, you start to see Bitcoin serving as a hedge, similar as you can make the argument that Bitcoin would serve as a store of value. Just how volatility is reduced over time for Bitcoin, even though we do have these still great cycles in Bitcoin. The overall historic volatility, similar to gold, has been declining. So we are starting to get something that's much more stable, at the same time is still finding price discovery and growing as an asset. To Carl's point in this case, I think that the Iranian-US conflict and also the coronavirus, as we talked about on the channel, it's the same kind of narrative where it's like slowly but surely we are starting to see these things reflect, and Bitcoin is starting to react alongside a lot of the commodities we know, such as gold and crude oil and silver, usually how they react during these kind of fearful periods. Again, it's not something that'll be obvious to everyone because, again, the whole world doesn't know about Bitcoin. But as Carl mentioned, more and more people are becoming aware of it. The more awareness there is, the more you start to get a narrative that if Bitcoin is a risk-off asset, if it's an asset that you can hold and have autonomy over your wealth, you can be lacking in the sense of control of nation states or third parties, where there's counterparty risk. In this case, you can now start to have something that can help you during these times. It's, to put it simple, I would say that Bitcoin tends to do well in fear. Like we've tended to see that over the last few months. I think we saw that in the first half of 2019. As we were going into the summer, there was a lot of concerns. There was a lot of geopolitical crises going on. And I think that, again, we started to see Bitcoin react in that way as well, serving as a hedge in this case. And now that we've started to alleviate a lot of those concerns, Brexit has come to a resolution. The basically the UK is going to be leaving the EU. We have the Hong Kong protests going down a bit, right? A lot of those things, as well as the U.S.-China trade war, starting to dwindle down. We're reaching some agreements in that regard. We've now started to see again, during that same period of time where Bitcoin was correcting, these resolutions started to come into play. So again, I think that it's playing very much on as a risk. If there's risky elements to the global markets, then in this case, you're going to start to see benefits coming into Bitcoin's price.
So this is a nice broad question for you guys. I'd like you to just name one thing that you think is the most important thing to be paying attention to in the cryptocurrency space in 2020.
So yeah, for me, in 2020, I think that the big story and the big hype is going to be around the halving. I think that it's not very shocking by any means. I mean, that is a huge event. But I want to really stress how important the halving is. It's just like you were talking about earlier, Nicholas, how the stock to flow ratio and the fact that the inflation rate will be cut in half. It's such a huge deal, and I think that is the big story for 2020, and that is what I am really keeping in mind here. And I want to try to just continue to educate people on my channel about the halving and what it really means, and maybe some price models looking back into history. But I think that's the big story for 2020.
Yeah, I would say that for what I'm interested in 2020, I'm definitely interested in the halving event. The one thing that's really gotten me not only energized or kind of re-energized about cryptocurrencies since we've been through the bear market in 2018, but also has just really tapped into my passion for the space is what's been going on in the decentralized finance movement or DeFi movement on Ethereum and a few other protocols. The sheer potential that lies in some of the applications people are building, from the lending pools where you can earn interest rates that are 50 to 100 times more than what you can earn in a savings account in the United States, that can open you up to higher interest earning markets. The decentralized exchanges that are now finally building liquidity, that are building better systems that actually allow you to get better rates sometimes than you can get on spot exchanges if you're not trading too much money. I think all these things are starting to really make me excited about the potential wave of technological and fundamental improvements that the cryptocurrency space has been building throughout all the bear market, while people were kind of, uninterested in cryptocurrencies. The real kind of cypherpunks and developers continue to build out the space. And I think we're seeing some great innovations too on Bitcoin, and as I mentioned, on other protocols outside of just Ethereum. But I'll be honest, the bulk of it has been really getting me excited in regards to Ethereum. The projects that are building layer 2 solutions and fixing a lot of the issues that have blocked enterprise adoption to utilizing Ethereum and other public blockchain protocols are now starting to finally be fixed, like the Oracle solution through Chainlink. So all these things together are really getting me excited. But I would say there's definitely an equal interest, I think, between what you brought up, Carl, with the halving event. I think that's what's going to carry markets forward, and it's going to be able to bring about much more interest in things like DeFi as time progresses, as more people get involved in crypto.
Thank you, everyone, for watching. That was The Moon and DataDash. And always remember to like, subscribe, and hodl.
Cointelegraph. Like, subscribe, and hodl.